earnings coming up. I think we said it's the 6th, mate, or 26th, maybe 28th. I
Yeah,
forget.
let me go up.
Coming up
So,
next week sometime, maybe 6 days out.
yeah,
Maybe it's 5 days out.
yeah. All right, let me grab the screen. Well,
Yep. Oops, sorry. There you go.
and then, yeah, so right now on Nvidia, you can see on the left-hand side, there's a menu, interactive charts. That's what I clicked on. And I'm going to close this menu just to expand our screen. And we came to this kind of summary page of uh, analysis of NVIDIA's earnings from different perspectives. We looked at options, we look at the stock, and we talked about this yesterday. And I think we stopped at the implied uh, moves based on option prices. So we basically covered, I believe, this page over here. When you click on it, you go to this page. You could also select it from the right-hand side. So we're right here on implied earnings moves. And this initially just analyzed the uh, from the perspective of option straddles right before the earnings release. And now let's go to this next tab over here, actual earnings moves. I'm going to click on that, and we'll get this different set of statistics. And what this is displaying is now looking at the actual earnings moves after NVIDIA reports earnings. So, right, where did the stock close right before it reported earnings? And after reporting earnings, where did the stock close the following day? Okay, what was the magnitude of the moves? Um, and what we're trying to do is just get a sense of potential volatility, potential earnings moves based on history. So we don't know. So here we go. NVIDIA is expected to report earnings August 28th after the market close, which is 5 days from now. We have no idea what the stock's going to do after it reports earnings, because that's in the future. We have no idea. Nobody knows. So to get a sense of what NVIDIA did in the past, we could look at the data and say, well, how did it react in the past? What are the potential ranges based on the past? Like, what were the biggest moves up? What were the biggest moves down? On average, how much did it move percentage wise? What are the standard deviations around that? So we want to paint ourselves a estimated model of potentials based on history, even though we don't know what will happen in the future. So this here gives us the data of the earnings moves NVIDIA had in past earnings. Right. So let's look at this chart first. Now, this chart here, don't mind this blue bar yet. Let's go over these green and red bars. The bars themselves all point up. You can see here it is based on the magnitude of the earnings move. Okay, so if it doesn't matter up or down, if the earnings move was 10% up or down, then this bar will go up to 10%. And this gives us a sense and an idea of the magnitude of the moves. Okay. Now, when the move was to the upside, then this bar will display green. If the move was to the downside, this bar will display in red. Okay. And visually, now, okay, and then see this dotted line over here? This dotted line going all the way across, that's the absolute average of all the moves. So if we took all the moves up and down, converted it to all positive, and took the average, that's the absolute average of all the moves. And that's over here, 7.3%. Okay, so we're looking at absolute averages. So what can we learn from this? Well, one is, yes, there's on average, the stock moved up or down 7.3% historically, given all these data points that we were looking at. But if we look at visually the chart itself, there's something that stands out. The moves, there's a lot of variability there. It's not like every bar is exactly at that 7.3%, right? Because if it was always 7.3%, all these bars would just go right up to this dotted line. But that's not happening. There's a lot of variability. We see some that are going way above the line, some are going like below the line. So that alone, the average, just that average it's not based on history that, reliable, because there's a lot of variability there, right? There's a lot of potential to be much way below that, way above that. So here, what the next thing we could do is look at the ranges. What was the biggest move and what was the smallest move? So here, that's what this is. The biggest move was 29.8%. Keep in mind, that's the magnitude move. The smallest move after earnings was unchanged. So that tells you there's a lot of risk there trying to, use history based on history. There's a lot of risk there that it could be all over the place, right? That from unchanged to potentially almost 30% move. Well, that's a really big range. So this 7.3%, even though it's an average, there's a lot of variability around that average. So that's one of the observations. Then we could look at what is the median move. So over here we have the median, and the median tells us if we split all these data points, okay? Let's say we sorted it from highs to lows, and then we looked right in the middle, right? Where, okay, we found all the data points, and we looked right in the middle, and we said, well, what is, the data, 50% of the data above a certain point and 50% below, right? That's 5.5%. That's the median. Okay, so half of the data is below 5.5%, half the data is above 5.5%. That's the median. And what this tells us is the following, that the average itself, right, is getting skewed from the median to the upside, because there could be outliers, right? There are outliers in the data, and we could see that the averages are getting pulled right towards one way. So you could have like this one big one over here that's up 30%, has pulled up the overall average, right? Because you're taking a very big high number. So that's also something to keep in mind, that there's a lot of variability, and even at that 7.3%, it could be skewed because of a single data point or a few outliers. So then let's move on to the simple averages. Okay, so now remember, we're trying to build a model or a sense of like potentials, right? And the reliability of those potentials based on history. So now we go to these simple averages, and we'll say, okay, let's just not use just absolutes. Let's look at just the actual move up or down. if we took all the moves, okay, and just averaged them out, the pluses and the minuses, what was the average? Well, that's up 4.1%. What that indicates is there was there was an upward bias. Okay, that on average, if you have a positive 4.1% in our case, then there's an upward skew, upward bias. There's the stock performed on average better than than uh, than the losses. What about the range of the best performing to the upside earnings and to the worst? How'd that look? Well, here we're showing that the best performance the stock showed after earnings was 29.8% in this data set. So that's right over here. You could see that sticks out. The worst performing earnings was down 18.8%. So I believe that one's over here. So you could see just the ranges alone are very wide. That's pretty wide range, that we're talking about. It just tells you that history shows it's been volatile, right? It could be very volatile, either up, either down, and that there's lots of variability between earnings of small moves versus big moves. And then again, we could take the median move, and the median is 3.6%. And the 3.6% median is, again, it's taking all the data points. In this case, it's not converting with the simple averages. It's not converting them all to positive. It's taking positive and negative, sorting them and saying, okay, half the data below, half the data above. So it's around a positive 3.6%, which also indicates that Nvda had a more positive skew after earnings. It tended to do, to perform better than worse, based on these data points and numbers. And we could also take all these data points. We took all these data points and we have greens, we have reds. Eyeballing it looks like there are more greens than reds. Greens mean the stock had a positive reaction. Reds means it had a negative reaction. So let's split that up into frequencies. What percentage of them were up in the green? What percentage of the data points were down in the red? And that's what this is, saying that 67% of the historical data shows that Nvidia was up after earnings. 33%, it was lower. So that's shown us from a historical perspective how that stock tended to move and how it tended to perform. All right. This over here, blue bar, that's just showing us where the option straddle is currently before earnings. So keep in mind that's going to change as we get closer to earnings. We're still 5 days away. So that straddle that covers earnings is going to change from here, potentially. So that's what this is, just to compare what the straddle up or down. So the straddle is, it comes from option prices, and that's the implied move up or down, and that's comparing it to the historical moves. Now I'm going to slide down here. And this here has it's a calculator that you could use. And the idea there is if you're looking at the data and you want to see, what percentage of the moves in either direction fell below a certain amount. So let's just say you're looking at the straddle today and you're like, okay, well, if the straddle, maybe I'm comparing the straddle to the historical moves, right? So this is what's the idea here. It's like if I'm looking at a straddle and the straddle is saying that, it's implying a 5% move. Well, if I use the actual moves historically, I may want to say, well, how often did the stock move below 5%? And how often did it move above 5%? Where does the straddle value right now compared to the actual historical moves? So we could use this calculator here, because it would be hard to eyeball if you're saying like 5%, because you could see here there's a bunch, that are, it goes all the way to zero actually, right? The median is 5.5%. So how often did the actual move fall below 5%? That's what this calculator. So if we put it in here and we put 5%, and if I put 5%, it's going to look, at all these historical moves and tells us in percentage terms how many of those moves up or down fell below 5%. That means the other ones were above. So let's calculate that. Calculate 43%. So 43% of this data that we're looking at, the magnitude of the move was below 5%, which means that 57% of the data shows that the stock moved more than 5% after earnings. Okay. And see now that little blue bar changed to reflect what I entered at 5%. So you could see it's below that long-term average, 7.3. Okay. Because it's not always obvious. What if the straddle is priced high and you're looking at the straddle and you're like, okay, the average is 7.3%. And what if the straddle right before earnings is priced at 10%? And the question will be, well, that seems like a pretty high premium. But how does that compare to actual moves? Like how often did it go above 10%, historically? So we could check that too, because we could see here that it's been as high as 29.8%. So it's definitely moved more than 10% historically, because we have at least one data point that was 29.8. But how often did it do more than 10%? So, we could eyeball it, and it does seem like there's more than one for sure. So let's see the percentage of the times that it did that. So I'm going to enter in 10% here. And this over here, it's going to tell us what percentage of the data was below 10%. Okay, so 10% here, calculate. And then saying 79% of the data from up here was below 10%. The actual move was below 10%, 79% of the time, meaning 21% of the time, the stock actually did move more than 10%. Okay. What about 15%? If I want to calculate my risk, even if I'm doing a straddle, what are my risks how often did it go above 15%? So I could put that in. A 15% move, which is a sizable move, right? But how frequently, because you'd think like 15% move is a pretty decent move for a stock. How frequently did that happen? So let's recalculate. And now this is telling us 86% of the historical observations show that that Nvda did not move more than 15%, but 14% of the observations show us that it actually didn't indeed move more than 15%. So that's something to keep in mind when you're doing a straddle or a strategy around potential moves in Nvidia. Because now we kind of get a better sense of, well, Nvidia, if you're trying to price things here, it's pretty hard, right? It's a very difficult situation here because even if we used averages, well, the average here is not super reliable because of the dispersion of data, and the range of potential moves is very high,
AD,
based on history. Yeah.
I didn't want to interrupt, but people are asking about it. Carlton was asking, and I'm not sure he's asking. Asks under what conditions should you use the straddle? And by use it, you could sell the straddle or buy the straddle. So not knowing what's asking. But Rob said, Carlton, my view, which may be good for nothing, is the straddles are best when there's a big volatility and a big move in the stock price is expected. But perhaps Dimitri could comment. I mean, I'm assuming Rob is meaning if you'd own it if you're expecting a big price move. But
Yeah. So to simplify it, okay, to not go into all the every factor or whatever, but like just to like simplify it in general terms. A straddle, you're buying a call, you're buying a put, or you're selling a call and you're selling a put at the money, like right where the stock is. And if you own the straddle, you want the stock to move in either direction, up or down, because you own a put. So if you own a put and the stock keeps moving down, the put will increase. If you own a call and the stock keeps going up, your call price will increase. But the stock price has to increase by a big enough percentage to cover the cost of both those options. And of course, if you sold it, you don't want the stock to move because you collected this data. You want the stock to just sit still, and then the straddle, it will come in, or eventually it's going to expire and go to parity or be worthless. So if you're looking at it from the straddle perspective, it's almost like it's like an over under. Think of it as an over under outlook. Okay, like if you're looking at a basketball game, and then and I don't like to compare it to gambling in sports, but just to simplify it, if I was looking at a basketball game and I wanted to estimate what would be the total score in the game combined, both teams, and what's the total score and whatever it is, let's say 220, right? Well, some people might think it's going to go over that. Some people might think it's going to go under that, right? So if the current, look, what do you call it, the odds or whatever, if the current bet is 220, right? Well, if you think it's going to go over, you could do that wager. If you think it's going to be under, you could do that wager. And the straddle is similar in that concept, that it's looking at the over underestimated stock move away from the strike. All right. So if you think that the stock move is going to be great, or you think the stock move will be this amount, but the straddle is implying that it's going to be below that amount, well, then it could be an opportunity based on that, on your outlook, right? Because if you think it's going to move 8%, but the way the people in the market are saying 4%, well, if you're that confident at the 8%, the 4%, straddle would seem undervalued, or underestimating the actual move. Of course, if your model or your outlook or whatever is saying that I think the stock, is going to move around 8%, and you give a range, let's say between 6 and 10%, right? 6 and 12%, but the straddle is priced at 15%. Well, that's above your outlook, right? So that's then you're saying, well, I think it's going to be under. So to simplify, that's how I would describe it. All right. Well, we're already over.
Yeah, we're right at 9:30. Sorry for the interruption, but if there's more stuff you want to cover on the video, we can do it on Monday.
Yep.
Great job, buddy. Everyone have a great weekend and a great trading day today. Rob did mention, and I pinned it. I think Hal is speaking today, so there are rumors out there that there may be some sort of cut. Who knows?
Okay.
But take that for what it's worth. Great job, Dima.
All right. Thanks everyone for joining. Stay safe out there. Have a great weekend. Have a great trading day. And yep, hope to see you guys on Monday.
Thanks, D.